Hi everyone, I thought you guys needed an update in terms of what's going on. Why haven't I made videos? Well, I started two businesses. They were doing well. I think they were good ideas, and we'll kind of see if those will continue or not, or where I put my time. They're not panning out exactly as I planned. Hey, that's life, and maybe I'll be back to making videos. I just have to prepare my time. Hopefully, I will be back. I really appreciate everyone who stayed subscribed to the channel, and I thought you really just deserved an update in terms of what I'm doing. Personally, when it comes to the stock market, I've been following it quite a bit. I have quite a bit of money involved, and me personally, I want to be clear. This is for entertainment purposes only. This is not advice. Consult someone else for advice. Me personally, I'm selling out of the stock market. I have four basic fears. In terms of local politics, the medical scenario, international politics, fiscal policy, you can see here, and we'll talk about each one of those. And pretty much, we'll talk about exactly how dire things are. I don't necessarily think it's all bleak and the end of the stock market or something like that. But in the short term, I'm selling out a lot of my positions. We made a lot of money in terms of when we were able to invest. Probably most people did if they invested at the same time. It was probably not so hard to make money simply because we kind of started the channel after the pandemic and the massive sell-off, and now we're hitting new highs. So obviously it's always easy to lose money in the stock market. In this case, I think it was also very feasible to make money, so I'm not trying to pat myself on the back. But anyway, I want to tell you what I kind of foresee in the next few years. And first, I just want to talk about something interesting, just vis-a-vis all of our other videos that we've kind of done. We mentioned quite a few companies that I guess they're massive international companies. They trade in foreign currencies as well. So, for example, the US dollar has fallen quite substantially over the past year, and not the worst it's ever been in 10 years or anything like that, but it has fallen quite considerably. There's always the risk that it could fall further, but either way, it's fallen. And similarly, when it comes to the Canadian dollar, it's also fallen. Once again, this is a 5-year chart, so not the worst. Could get worse. Who knows? Why is this important? Well, it's important because when we were talking about, companies like Coke or, what a TPR Tapestry, doesn't really matter. It really applies to any international company pretty much. When they are filing their, SEC, their 10K and 10Q, all these types of things where they are pretty much telling you their earnings per share, how much money are they making this year versus last year. Well, they're going to get a big bump because they have to convert all of those foreign currencies into US dollars. With the US dollar doing worse, it means that all these companies in foreign countries now will be able to convert, let's say, their yen, yuan, the pound, or whatever it might be, Canadian dollar. When they convert that all back into the US dollar, well, now this year will look like they've made a lot more money compared to last year. And of course, they always include footnotes, for example, saying, well, this isn't a real profit. This is just because of currency exchange. And so on one hand, you can kind of discount that and say, oh, well, who's going to pay attention to that improved profit? On the other hand, at the end of the day, in US dollars, which they are probably borrowing money in, they have more US dollars now. Even though maybe they did no better business, they have more US dollars now to pay off their debts. So that is a plus, and they might actually get rewarded quite nicely because they are technically making more US dollars. So that's something to consider with everything going on. Some international companies actually could fare well with this lower US dollar. And I really wanted to apprise you, because we're going to have some, fears. Maybe that's my natural inclination to be nervous, but there are, some very positive aspects vis-a-vis the economy and things like that, and when it comes to the stocks we have. Now, the first problem are the Georgia Senate runoffs. You can see here we have one Democrat with pretty much a 2% lead, another Democrat with 2% lead, and it's a 50 Republicans versus 48 Democrats in the House, in the Senate, I apologize, and the Vice President-elect would break any ties. So if they win, the Democrats win those two seats, it's pretty much a Democrat Senate, and that'll mean it's also a Democrat House and a Democrat President, presumably, right, if everything doesn't go crazy in 2021. That will mean that the Democrats control 3 both all three, the president, the Senate, and the House. And the stock market, it doesn't matter if it's Democrats or Republicans, it does not like when one party seems to control everything. They can do a lot more. And the stock market seems to like a little bit of deadlock. It likes to predictability, things that only get passed when really more than just a simple majority, I suppose, agrees with it. So that's not looking good. We'll find out quite soon what's going on with that, because that'll be starting to be figured out, I suppose, January 5th. I don't know. You can look at your newspapers and just get the details about the dates. But from my perspective, that's not a good sign. It's very close, seems to be leaning. Who knows if you trust polls, of course. Then the next problem. Well, the word of the previous year. Hopefully it's in the previous year, and this will all be behind us. But sadly, I think that there's a chance that a lot of the good news has been kind of priced into the stock market, right? We're not only back at previous highs, we're even higher than previous highs. And who knows what's going to happen, I don't think that mutations will make a significant chance that, the vaccines won't work because they're trained on, the proteins that actually... Yeah, it doesn't matter. Consult your medical professional. The point is, what are the odds that something goes badly with the pandemic? Vaccines aren't rolled out. They don't have the supply. Who knows what? Some new piece of news in terms of this whole situation, it's more likely to be bad. We pretty much have all the good news, I think. And so that makes me a little bit nervous. Once again, not the end of the world. Hopefully this thing is going to be behind us. But nevertheless, a slight fear, what happens in terms of the health situation. And on a similar note, in the UK, which this article is from, the public health, first of all, advises that the risk to human health from the virus is very low. There is a new avian flu, and it's positive in England. It's spread across England. Now we have reports in Egypt. I had first heard about it in South Korea, I think. Spreading between Japan and South Korea. That's where I had first heard about it, quite a while ago. It's already in France. So, once again, there's this other pandemic. Now, first of all, I put the UK article first, just to understand this does not necessarily will affect humans at all. There's a high likelihood that it might not even transfer. Sadly, we have seen bird flus transfer in the past. So something to really keep an eye on. If you haven't heard about it, it's possibly because COVID, is taking such a main stage. But this is something to be nervous about. At the very least, it means that, poultry and food will take a major hit. And that's something economies don't need when they're already in trouble, to have their food supplies just get destroyed. At least in terms of poultry. And here you can see also ducks, of course. But nevertheless, these are the types of health considerations that, let's pretend that it has really no effect. Well, people in the stock market might be nervous that it could have an effect. And so, that's the type of thing that makes me a little bit nervous in terms of the stock market, just because it's not on firm footing as far as I can tell. Okay, now taxes. This, I think, is a big one personally, and probably a likely one. So just going from the top here, you can see there's going to be a 2%, 2.6% increase to the pre-Trump levels when it goes on the wealthy. And so the wealthy will have, on average, a 16% deduction in after-tax income. So, that means that certain people, let's say it's Elon Musk, I don't know who these 1% people are, they'll have less money. They might start fewer companies, might invest less. Or, maybe they were just going to waste their money, quote unquote, on frivolous things, and this will be better going to the poor and to the government. I don't know. That's your political opinion, but certainly that's an important thing to remember when it comes to stock market. These wealthy people might be investing in the stock market, and so 16% less money might be 16% less going into the stock market. Now, in terms of the business tax, I think this is the most important. The corporate tax, first of all, according to his plan. Once again, nothing's actually been finalized here, so that's really important. But his plan, as publicized, was to go from 21% to 28%, right? That might hurt a lot of businesses in terms of, especially if they're not doing well financially. And here is a massive one, a 15% minimum book tax. We'll talk about that in 1 second. and the other one is a tax on international profits. Now, presumably that is to kind of dissuade companies from, let's say, selling or building perhaps and having factories outside of America, right? It's a very pro-America approach. How do companies deal with that? Do they move back stateside, to the United States, open up factories there? That might be very good for the American economy. I don't know. That's a very complicated question, of course. What would not be good is if companies decide, listen, at the end of the day, it's going to cost too much money to move, and so we'll just pay the extra tax. So that's just going to mean that there's going to be a lower lower income available for these companies, and it's going to be more difficult for them. At the end of the day, some people always analyze, the earnings before tax, for example, when they look at stocks to kind of avoid this murkiness. But at the end of the day, when you're paying off a loan, you always want to have more money in the bank. So, it's true that earnings, quote unquote, or I should say earnings before tax won't be affected by this. And people do use that metric to kind of avoid these presidential and party twists and turns to really gauge what's happening in a company. Is it getting better or worse? But at the end of the day, companies like to have more money in their pocket. So, it's going to be a difficult thing for some companies, especially when they have factories and things like that internationally. Okay, now let's go back to this 15% minimum book tax. This is a very different idea. I don't want to say it's a bad idea. I'm trying to not be political. But when you're looking at stocks, it's a little bit scary, right? When you're looking at investing in a company, it's scary. And I'll tell you why really quickly. So let's say you have a company like Amazon, and I'm sure Amazon will get hurt by this unless they start planning around it. So Amazon, for example, makes an enormous amount of money. However, they push an enormous amount of money into research and development. What's that research and development? That's jobs, that's all these different things. Fine. They're trying to push their company forward. And so they don't have to pay taxes. Why? Because they might not even have a profit. Why? Because all of their profit is in research and development, right? Making those rockets, being able to go into space. I think he's also trying to compete with Tesla on that, or I should say Elon Musk specifically. But, whether you agree with it or not, that's something Amazon does. However, what this minimum book tax would do, and this was my just first assumption, was that at the end of the day, if you, in your accounting, have a profit from sales, okay, you decided to put it into research and development, it doesn't matter, you're going to get a bare minimum 15% tax, regardless of whatever you want to try and discount to get out of paying taxes. You're at the bare minimum going to be paying 15%. So, it'll have to make these companies rethink how they're kind of avoiding tax loopholes, I suppose. And once again, you might think that's a really good thing, but when it comes to Amazon, that means Amazon's going to be paying an enormous amount of tax compared to what they are doing now. And a lot of growth companies would be hurt, I think, because, they're pretty much in the negative overall, even if they are making some sort of profit. And so they're going to have to start paying taxes on top of everything. Now, I think it's very likely that Biden would put a minimum. So, for example, an IPO or a brand new company, maybe they wouldn't be affected, but there's, I'm sure, lots of growth companies that are quite big, like Tesla, like Amazon, that could be massively hit by this 15% minimum book tax. So I think that was really important. And, when I looked it up, just because I want to make sure at the Tax Foundation, and you can, once again, research all of this on your own, they mention the same thing, people who deduct cost investments, but they also mention here net operating losses. So from previous years, that'll give you tax relief. So there might be just random companies that get hurt really badly because, hey, at the end of the day, they were thinking the losses from last year would help them in this year's taxes, and they are not being helped because there's a 15% minimum. And so it's almost like kicking them when they're down. At the end of the day, once again, politics aside, the point is, this could be very bad for companies, and it could be hard to kind of navigate and make sure, which stock is going to be affected by this or not. I'm sure there'll be some dust that will settle, and people will find their way around all of these issues Whether it is complying or whether it is finding some other loophole, who knows? But the point is that with this kind of tax plan, it's a little bit scary. And so you kind of have to see what's actually going to happen. And with the Georgia runoffs, so if it's a Democrat controlled presidency, they have the Senate and the House as well. This is very possible that this could happen. We heard Elizabeth Warren, Bernie Sanders make very similar, actually more extreme opinions than this. So, this is very much in line, I suppose, with the Democrat kind of thinking. Once again, I'm not trying to say it's good or bad, but in terms of investing, you have to be very nervous about this, and you might want to wait for the dust to kind of settle in that regard. The next problem that I think is going to be plaguing the U.S. economy is inflation. Right? Inflation kind of jumps around, always tries to target 2%. You saw after 2008 here, it jumped up to 3%. And if you look at the PCE, the personal consumption expenditures index, you can see it kind of jumps around quite a bit. 2008 also it jumped. What does this really mean? I don't know. It's so hard for me to tell. The Federal Reserve tries to target 2%. I think with all the debt that they owe, they might be willing to kind of erase some of that debt by allowing inflation to go up. This is my personal theory of how the Federal Reserve will try. One of their ways to ease the burden on the U.S. economy is if there's more inflation, that means that there's, for example, more U.S. dollars. If there's more U.S. dollars, it'll mean that it's easier for the government, for the Federal Reserve to be able to pay off all the people who lent them money, which are presumably other countries, for example. And other countries might not like it. They might also have inflation. But as long as the Federal Reserve doesn't, hike inflation to very, very preposterous amounts, a lot of people will keep the U.S. currency presumably as the default currency, and the U.S. Treasury and the Federal Reserve will be able to pay off all of these people kind of under the guile of paying them off, except they're using inflation to help it along. So what does that mean? Well, it means that stock prices will be inflated because, with inflation, that's just something people try and do. They try and put their cash into the stock market to protect against inflation because, if a dollar today buys, let's say, half of what it could, 5 years ago, extreme example, at the end of the day, McDonald's will then just increase their prices by double, and so their stock will go up by double, and so your money will kind of be protected from inflation. That's the general idea. And so the stock market actually might go up, by the way, if this is true. And not only might it go up, but people might think that they're making money in the stock market because their money doubled in 5 years, when in reality, they've just done nothing with their money. Their money hasn't really grown. However, it has been protected from inflation, so that is something. And so that's also kind of a positive opinion on the stock market, is that if there is a lot of inflation, presumably there's actually a good chance that the stock market could go sideways or even up, and in real dollars, their dollars might even go down. But if it was in the bank account, it would have gone down faster. So, for example, if you have $10 sitting in the bank and it's worth half of what it is now in 5 years, well, then you in real dollars have $5. Whereas in the stock market go sideways or up, but in real dollars, you only have $8, after 5 years. So 5 years later, you started at 10, now you have $8 because of inflation. Inflation would have taken away 5. You were in the stock market, so your money grew. However, inflation didn't grow fast enough to beat inflation is the point. So, that's a very strong possibility, actually. And, we'll come back to that in the conclusions. The other problems, intellectual property theft, what's going on in the world right now. It's a little bit topsy-turvy as companies financially are really struggling and fighting each other, in terms of China stealing intellectual property. But they're not the only ones. You have problems with Mexico, India, doing the same things, these new economies. It's very possible something that the U.S. did when they were, fighting Britain, and Britain was the superpower. And so how we deal with this intellectual property is a big deal. There's, for example, this argument that Nortel collapsed because of, Chinese hacking and they were able to steal company secrets and all these other things. Now, maybe that's just sour grapes, to be honest. I have no idea. Maybe it is somewhat true. This is an article from 2012. This is an old idea. This is an old problem. It's just coming to a head right now. Why? Well, because, for example, with Huawei, they are now have free of US technology, right? Because they were banned from buying US chips. And so that's only 8% of the total of their stations. But nevertheless, you can kind of see how the Chinese government and these companies are, trying to protect themselves and insulate themselves from, this American whatever trade embargo in terms of computer chips. And whether that's good or bad, once again, not trying to be political, I totally understand why US is doing what they're doing, and I understand why China's doing what they're doing. It's not hard to understand why everyone's doing what they're doing, but the point is, if you're going to be invested in US chip manufacturers, well, there's a chance that China could make their own, make them cheaper, right? That's the problem with Huawei, is that they're so much cheaper than the alternatives that it's very tempting for a lot of countries to just buy into them, even if there are security risks. Okay, so, in terms of intellectual property, always a risk, but it's becoming more of a risk and it's accelerated, I think. That's a little bit of my fear when it comes to technology. Not the biggest deal, though. Just because, when I say not the biggest deal, I just mean because it's always been a thing. It's just accelerating right now. Okay, in terms of war, that's always a scary one. Do I think it will happen? No. I think a lot of people are kind of nervous about war. Nevertheless, there are kind of some areas where it could be precipitated, I think, against America's desire. In terms of Iran, Iran is having a lot of financial difficulties. But the Biden, Democrat Party is very preferential towards Iran. It was under Obama. I think they're willing to go back to that. So maybe Iran doesn't want to strike out against the states because simply they might have somewhat of an ally. Nevertheless, when it comes to China, we were just speaking about them. They're having some, let's say, issues when it comes to Taiwan, right? Taiwan is understood to be part of China from China's perspective, and Taiwan thinks they're their own country. And so what China's doing is actually very interesting, a little bit scary in terms of, the fact that they took over Hong Kong, just kind of, I wouldn't say subtly because of all of the, just 3 million people protesting, but nevertheless, they passed laws and they kind of pushed their way in. And now, Hong Kong is part of China. It's really not separate, even if technically there may be some technicalities. You can see just them arresting so many people. And so the same thing is kind of happening with Taiwan. I think China is kind of taking over these places and is trying to do it in a subtle way. So, for example, even though they're quite vocal about it, what they're actually doing, I think, is somewhat subtle. So, for example, they're flying into Taiwanese airspace, and it's costing Taiwan about $1 billion just to scramble the air jets to force, Chinese air jets to not come into their airspace. And so China's, learning tactically what is Taiwan doing, what are they capable of, what's their radar doing, what can they detect. But they're also causing Taiwan to spend $1 billion, in 1 year just to, respond to some Chinese jets flying over. And perhaps China's just thinking they want to control the airspace, they want to have free movement, and so they're doing this just to show their power. Whatever the politics is, it doesn't really matter. The problem is that you could very easily see someone making a mistake, just like in the Cold War. Thankfully, nothing ever happened in terms of someone setting off any bombs, but, nuclear bombs. But if you read, the history, there were some times where it was extremely close, as far as people say anyway. And so when it comes to Taiwan, I really don't follow it to the intense need, and I don't have some insider information. My only point is, hopefully nothing ever happens with either country in terms of war. It would just be sad. Any type of death is it's never good. But the point is that what happens if something wrong happens, meaning Taiwan shoots something, or China, one person can just do the wrong thing, sadly, and now it is a military war. What happens if a boat is in the South China Sea and they hit a mine or they hit a rock and they think it's a mine. Mistakes have been made in the past that have caused wars, sadly. It's a very intense situation going on right now. And so, once again, a little bit scary. What's going to happen? What would America's response be? I think under Biden, especially if you look at Scarborough Shoal, what was the response there? America really tried to make some sort of peace between the Philippines and China. And even when China reneged on it, America kind of abandoned the Philippines and didn't come to their aid. And so I think there's sadly a slight chance that under Biden, he would allow Taiwan to fall to China. I don't know. The rhetoric is so hard. Who knows what's happening? I think under Trump, it would lean more towards some sort of military something happening. But once again, I don't think war would happen either way. I think that would require something very intense, and it would require a lot of countries agreeing to it. Nevertheless, it is still something to be nervous about. Okay, but at the end of the day, so what's going on? So why did I decide to sell? So pretty much what in terms of my portfolio, you've seen a number of stocks I've invested in, and I've covered them quite a bit and how much I was investing in them. And we did extremely well. Like I said before, it's not necessarily so hard to do so well in the stock market. We started after there was this huge crash, and so I'm not saying everyone made money, but we did some due diligence and we were lucky in terms of making money. But at the same time, it was probably not so hard to make so much money in such a short time. Now we're back at the highs. We're even higher than the highs. Before the crash, people were very nervous about the stock market being inflated. Now it's almost harder for me to understand the inflation. So what's going to happen? Well, I kind of intimated a very strong possibility, and that is that the stock market just trades sideways. It just keeps going up and down, up and down, up and down, and money doesn't really do anything. There's some inflation. Maybe you lose some money. Maybe you gain some money. It's hard for me to see the stock market right now continuing to gain at such a level that I'm willing to risk my money that I just gained in such a short period of time. So what am I doing? Well, in terms of my portfolio, it's always prudent to kind of, once again, not advice, but prudent to balance everything. So I had some gold and I had some other things like that, some mining companies that I'll just keep for now. In terms of my money, I've moved it out into cash. I'm also kind of looking at some options trading in terms of just playing off of this idea that the stock market is going to be quite erratic. It's going to be going up and down, I think. And so just trying to play a little bit of that in terms of trying to figure out what to do. In terms of this channel, though, I'm not going to be posting options trading. I think that's too much for me to try and both educate. There's a lot of stuff out there. But in terms of this channel, I'm going to have to leave it up to you guys what you want me to cover. I also need to think about what I'm going to do. And so if my opinion is that there's a strong chance of the stock market collapsing a little bit, so what are the types of companies that could be hurt? Well, we mentioned a lot of companies were these kind of big international companies. The problem with betting against them is at the end of the day, there's a lot of people invested in them. And if it goes down, well, people will look at it as an opportunity to buy while it's cheap. And so how far will it really go? And that's what I mean by things trading sideways. So it's a little bit tricky. But what I do think there are probably some options are, companies doing things like splitting and breaking up. And so they, take a small portion and they make a new stock out of it, right? There's all these technical terms for exactly what companies will do to try and split up their companies to try and gain value. And the reason is because sometimes the company itself feels that they're valued at a higher number and investors don't kind of... So for example, let's just take an example because this will be much easier. Disney has theme parks, it has movies, it now has a streaming service. Well, Netflix is only a streaming service, and maybe Disney will think, hey, look at us. We have a streaming service just like Netflix. We have the growth potential just like Netflix, and yet we're being valued as kind of the way we've always been valued in terms of theme parks and movies. Well, let's kind of split up the company And that way we'll have, Disney Plus on its own. People will have to value it as its own tech company, and we'll continue our company. And so Disney might take a hit, but Disney Plus, in terms of the stock value, will be so massive that it's worth it for them in terms of the stock owners. I don't think Disney will do that. There's too much copyright issues. I'm just using that as a rough example of what companies do. And so there's opportunity for some of these companies that kind of split because they're undervalued and they're not being looked at. And whether things trade sideways, and maybe even if things trade down, although it's a little bit hard to believe, but if things trade sideways, it's still possible for some of these companies that are, offshoots that people aren't looking at because they were really interested in the main company, and this is just a side kind of company. And so a lot of people who are invested in that main company, well, when that side company comes out, they just kind of sell it, they get rid of it. And so we could look into playing into that kind of market where it's a little, we're trying to find value in those smaller companies, and eventually they get recognized by the stock market of, hey, this really is a good company. And maybe those original owners didn't want it, but new owners do. So we could look at that. We could also look at finding IPOs or certain companies that we think are, let's say, committing fraud, and they will fail, whether or not the stock market goes up, sideways, or crashes. And I do think there's a good chance of a crash. I just think there's also a really good chance of it going sideways. But these companies that are committing fraud or are just horrible IPOs, bad companies, bad businesses, and they'll just crash. And so we could short these stocks, or buy puts, whatever the case may be, because we just assume that they're not going to do well. That's another option. And it covers, two bases. One, the company's not doing well. And B, if the stock market does crash, even if people don't realize this company isn't good, it'll just go down with the stock market as well, possibly. So those are kind of two avenues I was thinking of taking for this channel. And the third avenue is we kind of continue doing what we're doing. And at the end of the day, whether things go sideways or things go up, we just look for, understanding companies. And if things go down, well, we'll know what companies will do well in a crash. Or at the very least, we'll be able to recover. They won't go bankrupt. They won't, precipitate horrendous falls compared to other things. And they'll be able to recover. So, there's a few options of what we can do. I'd love to hear what you kind of think instead of just ticker symbols, although you're more than welcome. Just give me an idea of what you're interested in. Otherwise, I guess I can just try and see what I come by, and maybe it'll be a little bit of everything. But thank you so much for subscribing, and hopefully this update will be somewhat helpful, not too boring, kind of have my thoughts. I'm a nervous person, so take it for what it's worth. If you really think the stock market's going to do well, all the power to you. I hope you're right. Personally, I'm not wishing for anything to fall. I'm just taking kind of my winnings for now. And by the way, if it continues to go up and things stabilize in the stock market to the point that I say, hey, I don't see the stock market crashing, I don't see all these problems materializing, then yeah, I could invest some more money. And let's say I miss some of the winnings that other people have. Okay, that's fine. I'll get some more later. I'm okay with that personally. I'm more nervous about losing everything that I've just gained, especially in such a short time in this channel, and especially for you guys. So, that's kind of my perspective. Take it with a pinch of salt, sorry. And let me know what you think. Thank you so much for watching.